All right, so today we're going to be diving into some pretty fascinating waters. We're
Okay.
talking global finance and trade,
hmm
specifically looking at the ripple effects of former President Trump's tariff decisions.
Right.
Our main guide for this deep dive is Smart Money AI,
Okay.
which breaks down the market reactions, the economic fallout, and potential future scenarios.
Got it.
And it's not just about numbers and graphs, though.
Yeah.
We're talking about a potential trade war,
Sure.
shifting power dynamics, and yes, even how much you might be paying for groceries soon.
Interesting.
Yeah.
Yeah, this is a big one.
Yeah.
What's really intriguing here is how Trump's move goes beyond just tweaking trade policy.
Okay.
We're talking a 25% tariff on goods from Canada and Mexico and 10% on China.
Whoa.
These are some seriously bold moves, rooted in his America First stance and his goal of reducing trade deficits.
Okay, so these tariffs are meant to protect American industries,
Mm-hmm.
but Smart Money AI suggests some unintended consequences, too.
Right. Absolutely. While the tariffs aim to make imported goods more expensive and boost U.S. manufacturing, the reality is much more complex.
Okay.
Let's say you're a small business owner
Mm-hmm.
who relies on imported materials.
Right.
Suddenly your costs skyrocket,
Yeah,
squeezing your margins and potentially impacting job growth.
I see.
It's not just about who wins and loses.
Right.
It's about understanding the ripple effects across the entire ecosystem.
The ripple effects.
Yeah.
Okay, and what about the immediate global reaction?
Sure.
Smart Money AI mentioned some pretty dramatic market drops, right?
Oh, it was a roller coaster for sure.
Wow.
Global stock indices took a hit with the FTSE 100, a major UK stock index,
Hmm.
experiencing its worst day since October.
Whoa.
Remember, investors crave stability,
Right.
and a potential trade war throws a massive wrench into the gears of predictability.
So how does this market turmoil actually impact, say, my retirement account or investments?
Right.
It's not just about Wall Street panicking, right?
Not at all. Those market drops translate directly to potential losses in your portfolio.
Ooh.
And it's not just individuals feeling the heat.
Okay.
Think about pension funds and institutional investors.
Uh-huh.
They're major players in the market,
Mm-hmm.
and this volatility creates ripples throughout the entire financial system.
Entire financial system. Wow.
Yeah,
Okay, so Smart Money AI dives into the intended beneficiaries of these tariffs,
right.
highlighting U.S. manufacturing.
hmm
But if the goal is to boost domestic production, what about those industries reliant on imported materials?
Yeah,
Couldn't that backfire?
that's one of the paradoxes here.
Okay.
While some sectors might see a boost, others could face significantly higher costs.
Uh-huh.
Take the construction industry, for example.
Oh.
A tariff on imported steel could drive up building costs,
Right.
potentially slowing down projects and ultimately hurting job creation in that sector.
So it's not as simple as just saying, okay, this is going to help American manufacturing.
Right, it's not a simple equation.
Yeah.
There are a lot of moving parts.
And how does this all play out for small businesses,
Yeah.
especially those operating on tight margins?
Well, small businesses are particularly vulnerable to these price hikes.
Right.
They often lack the negotiating power of larger corporations and might struggle to absorb these increased costs.
Okay.
This could lead to some tough choices, raising prices, reducing staff, or even closing up shop.
Oh, wow.
Think about the impact that could have on your local community,
Yeah.
your favorite shops, and the overall economic vibrancy of your town.
Yeah, you're right.
It hits close to home.
Yeah, it does.
Or look.
So we've got these intended benefits for some U.S. industries,
Mm-hmm.
but also potential harm to others.
Yeah.
And then there's the whole global reaction to consider.
Exactly.
Could this escalate into a full-blown trade war?
It's a real possibility, and Smart Money AI breaks down some potential scenarios.
Okay.
China, for instance, has signaled its intention to retaliate by targeting key American exports. Imagine the impact on American farmers if China slaps tariffs on soybeans, a major agricultural export.
Right.
It's a classic example of how these actions can have unintended consequences far beyond their initial targets.
Yeah, the ripple effects again.
Exactly. The ripple effects.
Throughout the-
You can't contain them.
We've got to think about those.
Yeah, absolutely. And it's not just China we need to consider.
Right.
Canada and Mexico have also hinted at retaliatory tariffs,
Oh, really?
potentially targeting American steel and aluminum.
Okay.
It's a complex web of interconnected economies, and actions taken by one player can trigger responses across the board.
It's like a global game of chess, with each move creating a ripple effect.
Yeah, that's a great analogy.
But if everyone ends up losing in a trade war, Why do countries even engage in them?
It often boils down to political strategy
Okay.
and a desire to protect domestic industries, even if it means potentially harming the overall economy.
Right.
Sometimes national security concerns also factor into these decisions.
So there's this political layer on top of the economic realities.
Absolutely.
Smart Money AI also digs into the impact on investor sentiment and market uncertainty.
Right.
How does all of this play out in the financial world?
Well, think of the financial markets as a giant hypersensitive organism.
Okay.
It thrives on stability and predictability.
Right.
When trade wars erupt, it's like injecting a dose of adrenaline into the system. Investors get jittery,
Okay.
leading to those wild swings in the stock market we discussed earlier.
So is it all doom and gloom for investors during these times?
Not necessarily. Savvy investors who are comfortable with a bit more risk can actually find opportunities in these periods of volatility.
Oh, interesting.
But for the average investor, it's crucial to stay informed, diversify their portfolio, and avoid making impulsive decisions based on short-term market fluctuations.
So stay calm, but stay informed.
Exactly.
Smart Money AI outlines some potential long-term consequences if these trade tensions persist.
Right.
They use the term deglobalization. What does that actually mean, and is it necessarily a bad thing?
Deglobalization essentially describes a shift towards more regionalized economies.
Okay.
Countries would focus on developing their own industries and become less reliant on international trade.
Okay.
There are potential benefits, such as fostering local industries and potentially creating jobs in specific sectors.
So almost like a return to more localized economies.
Yeah, in a sense.
But I'm guessing there are downsides too.
Yes, the interconnectedness of the global economy has led to lower prices and increased efficiency.
Okay.
Deglobalization could mean higher prices for consumers due to reduced competition and potentially even limited choices in the marketplace. It's a complex trade-off with potential winners and losers.
So a mixed bag, to say the least.
Absolutely.
Smart Money AI outlines a few potential scenarios for the future, ranging from best case to worst case.
Right?
What are some of the key possibilities they highlight?
One scenario involves a continued escalation of trade tensions.
Okay.
Imagine a world with more tariffs, more retaliation, and a deepening economic downturn. That's the worst case scenario, but it's not impossible.
Right. And on the flip side, what does the best case scenario look like?
Ideally, cooler heads prevail, and countries engage in constructive dialogue to resolve their differences.
I like that.
Imagine new trade deals being negotiated, tariffs being reduced, and countries addressing the underlying concerns that led to these tensions.
So diplomacy is key to navigating this complex landscape.
It's absolutely essential.
Smart Money AI also delves into the role of the Federal Reserve during times like these.
Right.
How does the Fed fit into all of this?
The Federal Reserve, or the Fed, acts as the central bank of the United States.
Okay.
It's like the conductor of the economic orchestra,
Okay.
with a key responsibility being to control inflation.
And how do these tariffs impact inflation?
Right.
We've talked about price increases, but what's the connection to the Fed's role?
Imagine a chain reaction. Tariffs raise the cost of imported goods, forcing businesses to pay more for their inputs.
Okay.
To stay afloat, they pass those costs on to consumers, leading to higher prices across the board.
Yeah.
That's inflation in action.
Okay, so if these tariffs contribute to inflation, how does the Fed respond?
Right.
What tools do they have at their disposal?
The Fed's most powerful tool is its ability to adjust interest rates.
Okay.
Raising interest rates makes it more expensive to borrow money, which can cool down an overheated economy and help curb inflation.
But wouldn't slowing down the economy have negative consequences too?
Of course.
It seems like a tricky balancing act.
Exactly. Raising interest rates too aggressively can stifle economic growth and potentially even trigger a recession.
Oh, wow.
The Fed has to walk a tightrope, carefully weighing the need to control inflation against the goal of promoting a healthy economy.
It sounds like the Fed has a tough job, especially given all the uncertainty surrounding these trade policies.
Absolutely. The Fed needs to constantly monitor economic data and be ready to adapt.
Okay.
Their decisions have significant ripple effects on the overall economy and directly impact businesses and consumers like you.
Okay, so we've covered a lot of ground here. We started with the immediate market reactions, delved into the potential for retaliation, and explored the long-term consequences of a trade war. We even discussed the role of diplomacy and the challenges facing the Federal Reserve in navigating this complex landscape.
And remember, Smart Money AI isn't just offering doom and gloom.
Right.
It also provides insights into how businesses and individuals can adapt and make informed decisions during times of uncertainty.
It's a reminder that knowledge is power.
Absolutely.
The more we understand these global events, the better equipped we are to navigate the economic waters.
Yeah.
Okay, so we've been unpacking former President Trump's tariff decisions. And it's clear this story has tentacles reaching far beyond those initial headlines.
Yeah.
What stands out to you from Smart Money AI's analysis?
I think the sheer interconnectedness of the global economy is really driven home here.
Yeah.
It's not just about the U.S. and China.
Right.
It's a cascade effect,
Yeah.
impacting businesses, consumers, entire nations.
It's like that butterfly effect, right?
Exactly.
One decision can trigger this chain reaction across the world.
Mm-hmm.
So given all of this, what are some practical steps that businesses can take
Right.
to navigate this new landscape?
Well, Smart Money AI suggests diversifying supply chains.
Okay.
It's about reducing reliance on any single country,
Mm-hmm.
spreading the risk, so to speak.
Okay.
Mm-hmm.
If one region gets hit with tariffs, your entire business isn't crippled.
Makes sense. But what about us,
Right.
the everyday consumers?
Sure.
What can we do besides just feeling overwhelmed by all of this?
Well, I think staying informed is key.
Okay.
Don't just tune out the financial news.
Right.
Pay attention to how these trade policies are evolving and how they might impact the prices of things you buy regularly.
So maybe time to start paying closer attention to those market reports, huh?
Exactly. And think about your spending habits, too.
Okay.
If certain products become more expensive due to tariffs,
Mm.
explore alternatives or adjust your budget accordingly.
It's about being proactive and adaptable in a changing world.
Being a savvy consumer.
Yeah, exactly.
Smart Money AI also highlights that this situation isn't static.
Right.
Trade policies can shift, negotiations happen, new opportunities can emerge.
Absolutely. It's a reminder that we live in a dynamic world.
Mm-hmm.
Things can change quickly,
Yeah.
and staying informed is crucial.
Okay, Smart Money AI also reminds us there are always multiple perspectives on these issues.
Of course.
Some argue that tariffs are essential for protecting domestic industries and jobs,
Right.
while others believe they harm consumers and the economy overall.
Yeah, it's a complex issue with valid arguments on both sides.
And that's where critical thinking comes in.
Absolutely.
Don't just take information at face value.
Right.
Dig deeper, consider different viewpoints, and form your own informed opinions.
I think that's so important.
So as we wrap up this deep dive into global trade and tariffs,
Yeah.
what's the key takeaway you hope listeners walk away with?
Well, I hope they recognize that in this interconnected world,
Mm.
economic decisions have far-reaching consequences.
Right.
But remember, we're not just passive bystanders.
Okay.
Our choices as individuals, our voices, our actions,
Mm.
they collectively contribute to the future of trade and globalization.
That's a really empowering thought.
It is.
To remember that even in the face of these complex global issues, we have a role to play.
We do.
Whether it's through our consumer choices,
Right.
political engagement, or simply staying informed and having these conversations,
Absolutely.
we can all make a difference.
That's the beauty of it. We're all part of this intricate web,
Yeah.
and our individual threads contribute to the larger tapestry.
And on that note, we've come to the end of our deep dive.
Okay.
We explored the impact of former President Trump's tariffs,
Yeah.
uncovered the complexities of global trade,
Mm-hmm.
and considered the potential consequences for businesses, consumers, and the world at large.
It's been a fascinating journey,
You really have.
and I hope you've gained some valuable insights along the way.
Keep exploring, keep learning, and keep asking questions.
Couldn't agree more.
The world of global trade is constantly evolving, and staying informed is more important than ever.
Absolutely.
Until next time, keep diving deep.
Sounds good.